All right, let's get right into it. Today, we're tackling one of the most exciting and, yeah, one of the most volatile sectors on the market, the quantum computing stock race. We're talking high risk, but potentially massive, massive rewards. Welcome to Sam's Stock Report. We're focusing on three pure-play companies, IonQ, DWave, and Rigetti. And it is absolutely crucial to understand right from the get-go that these are not your typical value stocks. Their valuations, they're not based on today's profits, but on the massive, world-changing promise of tomorrow. Yeah, on Wall Street, there's a term for this, story stocks. You're not really buying a balance sheet here. You're buying into a narrative, right? A vision for a truly revolutionary future. And our job today is to figure out how to separate that science fiction from the hard financial facts. Okay, but before we dive any deeper, I have to give you a critical warning. This is a big one. Please do not confuse any of these companies with Quantum Corp. That's ticker QMCO. It is a classic trap for investors who just search for the keyword quantum. QMCO is a data storage company from way back in 1980. It has literally nothing to do with quantum computing. It's a costly mistake, and I really want to make sure you avoid it. All right, with that important PSA out of the way, let's get to the real core of this. You see, each of these three companies is making a fundamentally different bet on what the future of quantum technology is actually going to look like. And believe me, understanding these different bets is the key to understanding the entire investment. So first up, we've got DWave, kind of the old guard of the group. They're the pioneers of something called quantum annealing. Now think of it like this. Imagine you have this huge, hilly landscape, and you need to find the absolute lowest valley. Well, annealing is kind of like shaking that whole landscape, so a ball naturally settles into the very lowest point. It's a super specialized tool, and it's brilliant at solving one specific kind of problem, optimization. And they have real big-name customers. We're talking Lockheed Martin, BASF, using it today. But here's the catch. Its biggest limitation is also its strength. It's a niche tool. It can't run those world-changing algorithms, like the ones for breaking encryption, that really define the ultimate promise of quantum computing. Next up is Rigetti. Now they're using what are called superconducting qubits. This is the exact same approach being taken by the absolute titans of the industry, Google and IBM. The big plus? Speed. The gate operations are incredibly fast. But the weakness is a big one. These qubits are notoriously unstable and super error-prone. Why? Well, they're just incredibly sensitive to any heat or electrical noise, which is why they need these massive, ridiculously expensive cooling systems. And the bottom line is, this puts Rigetti in a brutal head-to-head fight with two of the biggest, richest tech companies on the entire planet. That is a tough spot to be in. And that brings us to our third player, IonQ. Their approach? It's completely different. They use what are called trapped ions, and this is what's so fascinating. IonQ is using individual atoms as their qubits. I mean, think about that. These are, by their very nature, perfect and identical, literally created by nature itself. This leads to incredibly stable qubits with extremely low error rates. Now, sure, they have their own challenges with scaling up and getting the speed right, but a lot of people in the field see this as the most promising path toward a true, scalable, fault-tolerant quantum computer. Okay, so we've got three very different bets on the table, right? DWave's practical, niche approach, Rigetti's race against the giants, and IonQ's focus on quality from the ground up. But for us as investors, the million-dollar question, or maybe billion-dollar question, is this. Which of these stories is actually translating into cold, hard cash right now? The common wisdom, the story you hear a lot, is that DWave has to be the revenue leader, right? I mean, they're the oldest, they're the most practical. It just makes sense. But is that what's really happening? Let's take a look at the numbers and find out. And wow, this chart tells a completely different story. It's a real surprise. IonQ isn't just leading, it is the runaway commercial leader. We're talking $20.7 million in its latest reported quarter. That is nearly 6 times what DWave brought in, and more than 10 times Rigetti. This just completely flips the common market narrative on its head. Clearly, IonQ has found a way to monetize its technology, and it's likely through making their systems accessible on all the major clouds, AWS, Azure, and Google Cloud. And it's not just about the revenue coming in. In an industry like this, one that just burns through cash at an absolutely incredible rate, having a huge war chest is essential for survival. And look at this. IonQ is sitting on $1.08 billion, and that's all in cash and short-term investments. That gives them a massive, massive runway to fund their R&D and just outlast everyone else. Okay, so the picture that's emerging is pretty clear, right? IonQ seems to have the lead in both the underlying technology and the financials. But let's not get ahead of ourselves. This is still a super high-risk sector, and these companies aren't just fighting each other. So let's zoom out, look at the bigger risks, and pull all of this together into a final thesis. So here's the real competitive landscape, and it's not what you might think. The biggest threat to Rigetti? It isn't IonQ. It's Google and IBM. The biggest threat to IonQ? It's not Rigetti. It's this massive, really well-funded private competitor called Quantum Annealing, who, by the way, is also using trapped ion tech. And DWave? Their biggest threat is really just the ceiling on their own niche market. So with all that in mind, what's the final verdict? Let's start with Rigetti. For us, this one is an avoid. They've got the lowest revenue, they just missed expectations, and most importantly, they're locked in a technology race against Google and IBM that, frankly, looks unwinnable. It's a classic David versus two Goliath scenario, and the odds are just not good. All right, now for DWave. Our stance here is neutral. Look, this is a solid company. They have a real niche business, and they'll probably survive and do just fine. They're solving actual problems for customers today. But trying to justify its multi-billion-dollar valuation based on what is ultimately a limited, non-universal market, that's really tough. It feels like a much safer play, but probably without that explosive, life-changing upside we're looking for. And that leads us to our final call, IonQ. We're rating this one a speculative buy. Why? Because it combines everything we've been talking about. It has what we see as the most promising technology path. It's got the strongest commercial traction by a country mile, and it has the best capitalized balance sheet to survive and win this marathon. Yes, it has the highest risk of the three, but it also has, by far, the highest potential reward. And look, we're not the only ones seeing this massive potential. Wall Street analysts are getting extremely bullish on this stock. We're seeing some price targets stretching as high as $80 a share. Now that reflects some serious confidence in IonQ's roadmap to potentially dominate what could one day become a trillion-dollar industry. So there you have it. The technology is absolutely revolutionary. The risks are, well, they're immense. But as we've just seen, the potential upside is truly staggering. If you found this deep dive helpful, please make sure to subscribe to the channel, hit the like button, and let us know your thoughts on the quantum race in the comments below. We'd love to hear which technology you're betting on. Thanks for watching.